All right, we are live. So, welcome everybody to the MC Trading YouTube channel. We have a special guest today. We have Mr. Linus from the MC Trading Discord, and he's going to go over FOMC and some other things today. So, Linus, it is all yours.
All right, thanks for setting all this up. Let me add to the created invite real quick. Oh, we got some people showing up. That's cool.
There you go.
So, oh, he's gone. No. All right, so let's get started. So we've got a big event tomorrow. FOMC is the event of the week for now. More on that later. So what I'm going to kind of go through today is tonight's going to go through get out of this chop box that we're in is going to happen tomorrow. So there's a couple things that I'm going to be looking for in tomorrow's FOMC preview. So we're going to just kind of go step by step here. And what I'm going to do is kind of as we're doing this, I'm going to live chat. So the FOMC calendar, if you guys don't know, what happens is at 2 p.m. tomorrow on the calendar website, the FOMC, you'll see on this page, it's just on the Federal Reserve site, at 2 p.m. a statement will get released. So similar to what's here on September. That'll come in an HTML format. And what happens when that 2 p.m. happens? And that statement drops, the algos pick up that statement and they run through it with precision to look at keyword, buzzwords. You're looking at neutral rate, you're looking at 75, 50, 100, and they're deciphering what's going on in that market. So what's going on in that statement. So what you'll see right at 2 p.m., and it's great, it's like clockwork, is the market will drop immediately, right at 2 p.m., without fail. And about 10 seconds later, it rockets right back up to where it was. Now, you can't really catch much on that because the spreads on options just go bananas, right? They go on both extreme sectors, so there's really no trade to have there. But it's always entertaining to watch. So what we're going to be looking for in that statement, and I'll pull up the September one, and as you can see, it's a short statement. There's nothing much to it. You can see they say we're going to they're trying to achieve the inflation rate of 2%. Their Fed funds rate is still 3 to 3.25%. That's what they've raised it to, is 3 to 3.25%, which was accurate following a 75 basis point hike in this particular meeting. And that's all she does it till 2 p.m. Now, in other FOMC meetings, or in bigger FOMC meetings, I should say, they're all big, but bigger ones, you get this projection materials also at 2 p.m. So let's click on that. And what the projection materials are, is this gives you a nice table to look at what the Fed is looking to do and their projections in the next few years. Nobody really cares about 2025, 2024. All eyes are on 2022, 2023. And they're looking at projection rates for the Fed funds rate. This guy right here. So this was the last meeting that this information came out. What they're looking for GDP, unemployment rate, PCE, core PCE, et cetera, et cetera, et cetera. So I'm going to focus real quick on unemployment rate because this one's an important one. They want it to be, or they're anticipating it to be, around 5% year-end 2023. For that to happen, if that happens, that means the Fed funds rate can drop 2023. They're looking at a 4.4 to 4.9 Fed funds rate towards the end of the year. These are end of the year projections. Well, if you know our current rate is 3.0, 3.25, if they go 75 basis points, you're looking at, we're at 4% already. So this kind of leaves them a little bit of, not a lot of room to rate hike in all of next year, which is why you're getting this Fed pivot narrative things. So, not going to stay too much on that particular topic, but what is very important to note about this meeting tomorrow, there is no projection materials that will get released tomorrow. Those come out in December. So, with that, means the only thing we can focus on is that very short statement and the press conference that happens at 2:30. So, we have to. It is one of the more nutty FOMCs that I've been a part of, because you got opposite ends of the spectrum all over the place. You got some people think we're about to rally to 410. You got other people thinking we're about to tank to new lows, that Powell's going to do a Jackson Hole situation. So you got a lot of varying opinions, and you can kind of see that in the market action. I mean, it's up, don't get me wrong. It's definitely been green over the last few weeks, but in the last couple of days, you're starting to see, well, some resistance, 390 specifically. So what we need to look out for, or what I'm specifically looking out for in the meeting tomorrow. So there's three things. One, at 2:30 when he starts talking, he will basically just reread the statement that was released at 2. So you're not going to get much in the first 5 minutes. Once the questions start coming, that's where the fun begins. So the market is going to be watching every little move he makes, his body language, if he blinks a lot, if he's if he could be lying, if they're going to be looking for clues out like crazy. So what you can expect bullish buzzwords with hawkish rhetoric. So you'll hear him say, we're looking to do a Fed funds rate and get to neutral by the end of the year. If you hear that, that's a bullish statement. That means, oh, Jay Powell is considering pausing rate hikes by the end of this year. What most likely you're going to get from Jay Powell, and this is my own commentary here, is you're going to get a typical Jay Powell response. So we're going to be data dependent. All things are on the table for December's meeting, and our core goal is to get inflation back under 2%. Until we can get inflation back under 2%, we don't see any sort of change in our policy stance. Now, that is your normal Jay Powell speech. So the market is anticipating that. If Jay Powell comes in and says, we're encouraged by XYZ, we are monitoring the change here, XYZ, core inflation, jobs data, whatever it may be. Those are, again, kind of those bullish statements that maybe he's happy. And this is where we're getting into wacky land, right? Because you can just pick and choose what you want to perceive to be bullish and to be bearish. So what do you have to look out for? You have to look out for jobs. What he says about jobs data and unemployment and what he wants that to be. He won't specifically come out and say, we want to raise unemployment to XYZ levels. But he's going to say words like, we want to soften the labor market. The labor market's running too hot. If he continues to bring up jobs in his answers with the reporters, then we know, and in the back of your mind you should know, that we just got a JOLTS report today that was hotter than expected. Not only hotter than expected, they revised last month's jobs openings up by 200,000. So it was double whammy. And it was just a terrible jobs data number for bulls heading into FOMC. Well, on Friday, we get the big jobs report, non-farm payrolls. So if Jay Powell is super focused on jobs, that makes Friday's data release probably more important than it would regularly be. And it's normally a very important report. So whatever move you get in FOMC, you've actually got to be very cautious heading into Friday's jobs data, which is in pre-market. So you can't just, go overly bullish and follow the trend for swing traders for the next few days. You have to almost day trade it, because historically with FOMC, it's just wild swings up and down. And if you don't know what you're doing, or if you're simply just following price action, it can make you feel uneasy. However, if your plan is to be in something for 30 seconds or a minute, this is your day. This is where the big moves happen. You got to be quick. You got to know when you're on the wrong side of something. You got to know when you're on the right side of something. Super tight stop losses, and you can scalp away in the trend. But for me, I'm going to be looking for those vocabulary for jobs. So 1, jobs. How does he talk about jobs? 2, one thing you're going to look at is making sure he stays consistent with getting inflation back down to 2%. If he doesn't utter those words in tomorrow's press conference or in the statement, then the bulls will run, because they believe he's getting lax, and he wouldn't mind inflation coming down to 4% or 3%. So he has to say inflation getting back down to 2%. If he does not say that, that may be just enough. That little omission may be just enough for the bulls to make this thing run, which is crazy to think, but that is it, because Jay Powell has a lot of enemies now, from the Biden administration, whatever that was today, to businesses, to senators, to hedge fund managers, to TV personalities, whomever, trying to become his enemy to tell him what he's doing is wrong. So if he starts to buckle, and one thing about Jay Powell is he does have a history of caving under these pressures in 2018, when Trump publicly told him to stop doing the quantitative tightening. Business leaders publicly came out and told him this, and he pivoted, and the market rallied. So, if you're a business leader, if you're a hedge fund manager, and you've got the same guy in charge that's wrecking the market, you're going to do the same tactics that worked last time. So you can't put it past Powell to do a pivot. However, he has to focus on inflation. So if that omission of 2% comes from tomorrow, the bulls will take that and run with it, because that means he's kind of succumbing to the pressure around him. And lastly, the thing that you want to look out for tomorrow is you better enter a position and you know exactly why you're entering it and what reasons you are. So you can't just say, well, 3 big green candles must mean we're on our way. Because if you did that in the last meeting, and let's say you held beyond after he talked, it tanked hard. And I mean, the market was running, and me and my boss were actually listening to it together, arguing about it in real time, where he was thinking it was bullish and I was saying it was bearish. And that type of style can happen, right? Where you just get caught up in the price action, and ultimately it was the dot plot that saved my bearish stance. But tomorrow you don't have the dot plot, so you're going strictly off of Jay Powell's words and how the market will perceive it. So one thing to look out for is, just have a reason. If there is no harm that you will do to wait and not even play FOMC tomorrow if you're unsure, because it is a type of day that can rip up accounts. That I will probably most likely go light tomorrow, especially given the jobs data that's coming out on Friday. I think that, to me, is the trigger. Unless, of course, Jay Powell comes out and says 50 basis points. You don't even have to wait for the press conference. The market's going to rally. So you've got a lot of things you got to look forward to. So we're going to do a quick recap. Jobs. How does he talk about jobs? Does he keep bringing jobs up in the presser? Does he say that inflation, does he say inflation get back to 2%? And finally, 3, go light and have a real good reason why you're getting in. And if you're getting in to scalp, just scalp away and be done. Don't try and hit home runs. But if you're looking to swing or get a trend identification, make sure you have a good thesis on why you are entering that trade. 390 is current resistance on SPY. If we're running up, I expect that to be broken, probably test 396. Now, there is a likelihood and a possibility that FOMC does all its wacky movements while he talks, and you just get a 388, 390 close, or a 386 close. You may not get a lot because, again, you got pretty big important data on Friday that will move the markets. So one last note I want to say as far as FOMC, my thesis here, and I've posted it many times on the channel, but I'll go through it one more time. So here's my thesis. Jay Powell is in a prime position to act as if he can be dovish without actually being dovish, and that he can get his 75 basis point hike that he wants in the November meeting. Say he can be data dependent for December and appease the powers that be for midterms, appease the hedge fund managers, appease the market participants, and move the stock market a little stronger up, while still saying that he's going to be data dependent for December's meeting. What that allows him to do is get 2 jobs reports. So he'll get the one on Friday, and then he'll get the following one on the 1st of December. And it allows him to get 2 CPI reports and 2 PCE reports before having to make a decision in the December meeting. So if he truly is going to be data dependent, this is an opportunity for him to actually be data dependent. And my prediction is that he gives us real no hints of pivoting, but he doesn't he doesn't outright come out and say he's going to be hawkish in December. He's going to do the J Powell thing and say that he's going to be data dependent. So what does that mean? Well, if he does that, the market will probably blast higher after the jobs data on Friday, in my opinion. And as we gather up these economic data events for the next few weeks, the sessions in between them should be bullish. It's up until you get closer to the meeting and you start getting these data reports and they're not coming in as good as you want them to, whether it's inflation or jobs come a little bit hotter. That's when you'll start to see the dips and then consolidations and then move up. And the more data reports that come out from now until the next December meeting, that includes Friday's report, jobs report, the more likely Jay Powell will actually pivot, but not pivot to the way people want him to. He'll pivot to more aggressive, because this economy is now getting to the tail end of its steroid-induced run. And so if he's going to hit it, he has to hit it when the economy is at its strength. He should have hit it when it was at 480, 450, and 400, but he didn't. So it is what it is. We're here where we're at. But earnings are starting to crack a little bit. You're starting to see the big guys last week. They reported okay, but they didn't report, stellar. And so you've got, pretty strong consumers still, so you can hit the market and you can hit the economy with higher interest rates to get this inflation under control. But you got to do it now, because you can't kick the can down the road and do it, later into next year when things are really dire and the economy is slowing on its own. So this is kind of a sweet spot for Jay Powell. He can still do his policy and still be data dependent and still leave the door open to pound this thing into the strongest season in the U.S. economy. So that's kind of what I'm looking for. So long story short, I am looking for a move up, but it probably won't happen until a full move up, in my opinion. Probably won't happen until Friday's jobs data is probably when I'll be most comfortable to enter a position, whether that's up or down. But I am leaning in my bias a little bit up just because of the circumstances around here. One last note I'll say, I know I just said one last note, but one more thing. You've got this idea of earnings being weaker and calmer, and the market has already been beaten up and it can't go down much further. I'm going to kind of give you this example of, we're all sports people. And if you're not, then just entertain me for a minute. But Aaron Judge set the AL home run record of 63 home runs this year. Right. That was a record held by Roger Maris for many, 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 many decades. So think of Apple as Aaron Judge this year, where they just crushed it. Revenues off the charts, did great, all that. Is it realistic to expect Judge to hit 65 home runs next year? Sure, he could do it, but if he doesn't do it, is that deemed a failed season? I think, of course, the answer is no, but if Apple doesn't break their revenue record that they just hit last quarter, by next quarter, it's going to be considered a failed quarter. So this idea that the economy is, on the brink of collapse is nonsense, to be honest, because all it is just not hitting its record levels like it used to. It's got plenty of room to drop. So really, you should be comparing some of these companies to their 2019 levels and not their 2020, 2021 levels, because those are just induced by crazy amounts of stimulus. So when you hear it on TV and you hear all these people say, the stock's already beaten down, it's already done this, it's already done that. Look how it is compared to 2019, 2018 in their fundamentals, with their financials. And if they're way up from those revenue figures, then there's still plenty of room for these companies to tail off and fall again. So just keep that in the back of your mind. Don't kind of get caught up in the noise of it's already down, so it can't go down anymore. I mean, we all know how that works out, and it's not always a given thing. So J Powell knows that. He's looking around, he's seeing that, and he knows his time is coming up short to hit this market, but he still's got some time. And I think it's going to be, my opinion, December is when he's going to hit it the hardest, because that's when the market will be able to take it the best. So, also, I know I keep having thoughts in my brain, but the Wall Street Journal leak that happened 2 weeks ago, I made the mistake of dismissing it, obviously, and we rallied off of it. So historically, the Wall Street Journal is the publication that the Fed tends to leak things from. So to dismiss that report as just an opinion or just kind of a one-off thing is a mistake, and it was a mistake by me. The Fed wanted that news out there. If they didn't, they wouldn't have gone through the Wall Street Journal. So we were at the collapse of a crash, in my opinion. We were at the brink of a crash, in my opinion. And by putting that story out there, the theory goes, and I kind of subscribe to this theory, is that it allowed the market to move up a bit more so J Powell can hit this thing and create a little bit of a less harsher landing. So just keep that in your mind too. When Wall Street Journal Fed exclusives come out, listen and believe them, because the Fed is the puppet master behind those stories. And that means J Powell is behind those stories. So it's not a rogue Fed official that just decided to do it. This is very calculated, very meticulous, and it was very much a planned thing. 30 minutes before the open on a Friday, on monthly options expiration date, to give that type of opium out there, and it's fueled this Fed pivot rally. So the Fed pivot narrative that's out there is actually fueled a little bit by the Fed, and that kind of did my head in as well, but it is what it is. That's just where we're at. So that is a very fast and quick synopsis of what I've got. So yeah, I guess, Monty, do you have any questions or comments or concerns?
No, sir, I'm good. I appreciate you getting on and covering all that great info and great things to think about for tomorrow.
Yeah, it's a fun day. I mean, I'm gonna get the chicken wings and the French fries for lunch, and I'll be ready at having a late lunch, enjoying it, and I'll try my best to live chat my thoughts as I bring them on the channel. But and if you guys have any questions and don't feel comfortable talking, just post it on the channel. But I'll kind of open it up for any questions if anybody has it. Nader, if you do, you're on. I'll give you about 10 seconds. Is that anything? No. Baconic, I know you normally just chat your questions. No problem there. It's not Jay Wick. Do you have any questions or comments or concerns? I'll give you 10 seconds. 1, 2, 6, 7, 8, 10. Okay, no. And then RJJ, do you have any questions? Yeah, cool. Well, that's all I got. Monty, do you have any charts or anything you want to share? I didn't even. Let me look at a chart.
Right. Yeah. You know what? I don't think charts are really needed right this second, to be honest with you. ES. I was looking at it. I was kind of glancing at it when you was talking. Kind of just talk about it for a second. I'm not going to share it because it kind of goes through a lot of stuff to try to share this, but We rejected right above the 50 on the daily field line. So last time we did that, we crashed pretty hard, and ironically, last time we did that was right around FOMC. So kind of be careful right here. This is a spot where we pivoted at last time. We might have a rise back up to that 39.14, maybe all the way back up to the 39.50, 39.70 level. But be careful, because last time we did that, the next day we came down pretty hard. So
I actually wanted to share let me share a chart real quick that see if I can change window. Sorry, it's not the best preparation here. So here's a chart that I'm kind of looking at, and obviously this is a daily for SPY, but this 410 guy, I'm gonna drive Monty crazy because I don't ever have my stuff together.
you're gonna drive me crazy with these colors. Is what you're gonna drive me crazy with.
One day with this screen sharing, you can show me. So this is what I'm eyeing. So this is the daily chart for SPY. This 200 moving average. So this guy right here, and then here you got this downtrend line from the all-time highs. I've shared this on the chat. So let's hit that there. Yeah, we'll go a little lower. Let's get as many connections as we can. Yeah, so let's say right about there. So, not the best trend line, but you see what I'm saying. So, this red trend line and this circle right here, to me, you've got this downtrend line from all-time highs that we've just kind of obviously honored throughout. And you've got this 200 MA moving average. So for an upward target, I would say you're looking at about, and that's why everybody on FinSwit's saying, 410. But I would say you got this fib line about 407, which is the June lows to all-time highs. June lows have clearly been a support, so I think that fib is very much a strong indicator. And I think it holds up pretty well, just given that we couldn't take out those June lows and hold it for more than, a few days. So, yeah, I would say if you can get a rally out of JPAL tomorrow for the next few weeks, because to me, you've got jobs date on Friday, then you have CPI the following week, or it maybe, I think it is the following week, and then you don't really have much of anything after that. All the big tech earnings are gone. Fed's going to do their talking, but if you can get some flattish reports out of there, you got some jet fuel that you can move this thing up. 2 weeks ago, going to 400 was absurd. Now it's 15 points away. It was 10 points away at the open today. So it's not that drastic of a move to hit 400. So you can see within a few weeks, you could actually hit that 410 target from a technical standpoint, if all things work out fundamentally. So that's kind of what I'll be eyeing on the upside. If this thing decides to crack tomorrow and go down, I would probably say we hang around the 373 max would be the lowest I would go for the next few weeks. Because, again, I don't see us tanking headed into midterms that drastic. So it'll find support somewhere and kind of go with that bullish momentum as well. And whether the results of the midterms are bullish or bearish, I don't really know. But historically, leading up to them, they've been a little bit bullish. So that's what I've got. That's what I'm looking for, and it's going to be a fun one tomorrow too. So if everybody's good, that's all I've got. Monty, you good?
I'm good. I just appreciate you sharing, because we did a live Sunday, YouTube live Sunday. In that area you marked right there is kind of where I was anticipating if we got that high, where we would actually reject that. So we're kind of thinking the same thing there.
Yeah, that makes me feel a lot better. And that also, me and you've this will be, probably our fourth or fifth FOMC we traded. But I'll never forget the July one. We were both in lockstep. And I think at the time that was your biggest day.
Yes.
And we were both saying, this is bullish, this is going to 400, and by God, it did, and it just kept going. That was the run. It went all the way to 430 2 weeks later.
Right,
So,
yeah.
and then I got JPOW. But yeah, I could see where this is a spot for JPOW to do that and then hammer it one more time. Happily, actually.
Yeah, I'm interested to see what happens once we get, if we can break that 200 right there. You know, we're not far away from a higher high at that point, so that would kind of change the whole bear
Yeah.
market thing. So that's going to be interesting to see.
Yeah, it's like I said, this thing is so split though from all the analysts I find. I mean, obviously you got Maverick, who's as bearish as he could get, but even Money Maven is who I follow on YouTube. He's neutral. Michael Silva, who I follow on YouTube, he's neutral. Another guy, I've been reading his newsletter. He's Super Bowl, and even he's kind of like, yeah, it looks like it's a bullish setup, but I just don't trust it, right? And that's when the biggest moves happen, is when everybody's kind of, I don't trust it. Okay, I trust it, and they FOMO in, and
Right.
they can push it past resistance levels. So, yeah, from a time standpoint, 2 o'clock is the statement, 2:30 is a presser. He normally talks for about an hour. Sometimes he's gone over that. So if you're gonna do zero DTEs, which I don't recommend, but if you must, know that if you have certain brokerages, they may close you out in the middle of it. But just know that he can talk, and it can only leave you just a few minutes before the close for a bigger move that could go against you. So just be cautious out there.
Right. We actually
Remember,
had
if you can get through tomorrow, you can play Thursday, and if you get through Thursday, you can play Friday. There's always another day, and the casino's always open.
we had a few other people join the chat. So does anybody have any questions? I know Yanni and Felipe, you got, or anybody got anything else? Any questions, concerns, thoughts before we wrap this up? And hey, everybody just noticed that we went over 30 minutes because we're on YouTube. So
Look at this.
I know once I get it's gonna take it a minute. I'm gonna have to upload the video to YouTube. Once it gets uploaded, I will share it in the probably put it in a couple different channels so everybody gets a chance to listen to it if they want to.
Yeah, that works out well. All right, that's all I've got. All right, Money. We'll talk to you on the channel.
Awesome, Linus. Appreciate you jumping on and sharing your thoughts. And everybody have a good night. And I will see y'all tomorrow.